Hello, hello, hello. February 7th. It is Tuesday. It's Tuesday. Welcome back to the Market Minute with Drewski James. I'm your host, Andrew. What a day today, huh? They lull you to sleep yesterday and they come out firing today. Market opened relatively flat, waiting on the Fed chair, Jermaine. I don't even fucking know his first name. Who gives a shit? Powell was interviewed today, and actually, the start of the interview started out amazing. It was some of the best questioning I've heard. One thing the market loves, absolutely loves, is clarity. Whether it's good info or bad info, the market loves to know, and that's what we got today. Questions start out really on point, asking if Powell would have done a half a point raise last time if he knew what the jobs report was on Friday. He said no, he can't work like that. That'd be guessing. You can only use the information at hand. He reiterated that we are in that disinflation is here. It is encouraging. There's some other points that he would like to see come down, housing being one, sounded like. But overall, he sounded just like he did at his FOMC statement, which was encouraged. Probably a couple more rate hikes. The market is still... This is the weird dynamic. So over the past, 7-8 months since we started selling off last year, the relationship between bond yields and equities was, for the most part, inverse. So as yields went up, stocks went down. Today took an interesting shift. After Powell came out, market rallied. I think NASDAQ was up 250, 300 points at one point, and then hit a key resistance point and tanked. I think it was down 100 at the low, and then immediately reversed back up. Initially, what happened was yields started going down, or yields started rising. Stocks, old correlation would be sold off, and that's exactly what they did. But then what happened was equities came roaring back. S&P closed up, I think, 53 points. NASDAQ up about 220. And yields pretty much finished at their highs. Not really a correlation that we've seen. I do think people are still caught off sides. The market's still pricing in about one rate cut now by the end of the year. But Powell's pretty clear today that at least two more rate hikes, which puts him at the June meeting. Likely a quarter point each of the next two meetings, to basically their target rate of 5.25, which is where they said they wanted to be for, I don't know, at least 3 months. But for some reason, the market's just not interested in believing anything they say. But we did get a break off from that, which I kind of feel like people are hiding out in treasuries, and they're underweight equity stocks. So it could have happened today, again, speculation. What could have happened was people don't want to miss out on equities, and they're underweight, they're overweight bonds. So we saw the exit. So we saw yields rise at the same time as stocks. We'll see what develops with that, if that is the case moving forward. Crude had a hell of a day. Usually, if inflation comes roaring back, crude will kind of lead that charge. It's up 3.30 cents today. One of the biggest moves it's had in a while. So we'll keep an eye on that too. State of the Union is tonight. Likely Biden is going to talk about taxing the fuck out of the rich, taxing stock buybacks, which would be bad. But something else I think people might be overlooking is, for the past few months, he's been talking about bringing chip manufacturing back to the U.S. which would ultimately be a good thing. Hold on a second, I'm being chirped at. Camera might be a tad high. Oh, thanks. There's a stream chat if you want to pump in there. That'd be probably a little easier. Appreciate the watch. Where was I? So kind of what the consensus around the floors was, kind of risk off into tonight. Biden may gap the market one way or the other, but I don't see that happening. I bet it's going to be pretty mixed depending on, what he talks about. He's going to talk about more about infrastructure, making sure, infrastructure materials are all made in the U.S. What we'll probably see is a sector rotation. Chips will probably be strong tomorrow. Materials will probably be strong. Service as a software as a service probably pretty weak. And then, growth names, we'll see. So I don't think tomorrow's going to be anything big. But you never know. What else did I write down here? Some interesting stuff came out of Microsoft today. I know we talked about ChatGPT yesterday. That presentation was actually going on at the same time as Powell was speaking, so I didn't watch it quite yet, but stock was up $10 today, 4%. I think it was a little bit higher at some point. And just kind of what I mentioned yesterday, they're implementing it and syncing it up with the Bing search browser and with Bing and their browser. They're going to incorporate it in. I haven't looked into it yet, but like I said yesterday, if they start stealing market share from Google, who claims they have their own AI now, and now Baidu has their own AI now, that stock was up 12% today. So now it's the AI race. The cat's out of the bag with AI. Now that everybody wants their product to be first to market, it's I hope it's ready. And if it's not, and we lose control of it, I don't know, bad shit's gonna happen. But keep an eye on that. Everybody loves Microsoft is up $10 today, and if they do start stealing market share from Google, there'll be a nice big shift. Although Google is up nicely today as well, so clearly the market doesn't care. Probably because they announced theirs too. Kind of seems like we're at an inflection point here. The relationship between bonds and equities shifted a little bit today. One day does not make a trend. Let's see what else. Zoom, the old trusty Zoom, big old pop today on layoffs. And that reminded me, this market is starting to be, well, not starting to be, it's pretty predictable. The first it was SPAC booms. Announce a SPAC, stock 10x's in 4 days, and then slowly goes back to basically NAV and over the next 6 months. SPAC boom. Then it was when the S&P did a bunch of swap outs of stocks of what they include in their index. I remember Penn at one point, they got included in the S&P, and I think their stock jumped 50 points in a day, and now is 100 points lower than that. So we had SPAC boom, we had inclusion into the S&P. Then we had, and what's currently going on now is we have an AI product that'll boost your stock. That'll be a nice little boost. The other one is now layoffs. We're cutting 10% of the workforce, 5%, whatever it is. Zoom's coming out. They're cutting their workforce, which actually, for their margins, is massive. And that stock responded by being up 7 points right off the bat. I think it was red, closed the day up 10. I think that one's got a lot more room to run. Not a big Zoom guy, but I'm a trader, so let's ramp that one. That'd be cool. And I think that's it for today. Let's see if I got some notes in here. Dun-dun. How'd it go, fellas? You just gotta suck the mic. You need a mic stand and popper. I know I mentioned the popper stopper in episode 1. Alright, I'll get one today. Can't squat the dishwasher and heat on. Oh, so you can hear the background, for fuck's sakes. That probably fixed it. But now I gotta talk louder. We'll watch it back. Alright, well that's it for today. Hopefully you heard some stuff. Tomorrow should be relatively tame unless we're at the start of a new trend. Again, I do think bulls are on borrowed time here. I do think most funds and retail is underweight stocks, so I could see this going on for at least another couple weeks. A lot of stocks look like they're breaking back up, and then when that kind of runs its course, I think it's all hands on deck for a big real move down that makes the end of last year look pretty weak in terms of sell off. But we'll take it day by day, play it safe, don't be a hero. Listen to what Biden has to say tonight, whether you like him or not. He I guess does talk about stuff. Although now that I think about it, even if he does want to implement new taxes and stuff, it might be one of those things where he wants to implement, I don't know, I'm just making up numbers, 10% tax on buybacks. Then we send the stocks down to start the day. But then you think about it, there's almost no way he can actually enact any of these because he doesn't have control of the House. So I'm pretty sure the House is going to block anything he wants to do. I guess he could executive order it. I don't know the legalities of that. I'm not a constitutionalist or lawyer, so not sure. But take it day by day, play it safe, don't be a hero. Thanks for watching. We'll see you tomorrow on the next episode of Market Minute with Drewski James. Thanks for watching, and I love you. Bye.